Welcome back. Bruce Porter joins us now for this week's Dollars and Cents segment where we make sense of our money. Thanks for coming in.
Glad to be here.
On Donut Day, or National Coffee Day.
Best day in the world.
You picked a very good day to come in, didn't you? All right.
That's exactly right.
We are going to talk about not coffee jitters today, but market jitters and how to handle those market jitters. And I assume here what you're referring to is exactly what you said. You watch that market go up and down, particularly if you're heavily invested in one stock. It's up a few dollars, down a few dollars. You got a few thousand shares, you're up a few $1,000s, you're down a few $1,000s. Yep. It can drive you crazy.
So I've been getting a lot of calls. Everybody's worried. And like I've been saying, we have to pay attention to our dollars and cents show.
Sure.
Right?
Yes, always.
The market is volatile. It's going to go up, it's going to go down. One thing's important to realize, though. A week ago, the feds came out with their new rate, and they said, we're going to leave it alone.
We're going to leave it, right.
The market was anticipating an increase. Now, ever since then, the market's been down. So now it's really kind of thrown things into a tizzy, because it's the first time the market has reacted negatively to a Fed rate positive, which is we're going to leave the rate the same. Usually the market has taken off. So now there's lots of volatility out there, and that really hasn't changed. So, you know, we've been getting lots of news flashes. People have been talking, well, there's going to be billions of dollars lost in retirement accounts. There's going to be people that are going to lose a lot of money and things like that. Well, if you're concerned about the storm, move into a shelter. If it's pouring down rain, go inside. If you're worried about your money and your 401k, a lot of 401ks gives you the flexibility to do your allocations really at any time, or at least quarterly.
Sure.
Just reach in there, pull everything back, more conservative. But I got to caution you, if you're a long-term investor, if you're young and you're still working, stick with your game plan.
Sure.
It's a hiccup. You can go back and look at 08, 09.
Yeah.
You can look at 01, 02. You can look at 94. You can look at 89. We can go back and back. And, you know, you've got to stick with your game plan.
Yeah.
The advantage to a down market, if you're contributing on a regular basis, that same dollar is buying more shares. So while the market is down, it could be a positive if you're a long-term investor. You could be buying more shares. You pile up shares. If your dollar cost average of your share comes down, you're going to be in the money whenever the market rebounds. So if you're retired and you're really nervous about losing that nest egg and you're depending on it for income, you know, wake up. You shouldn't be in the market if you're that concerned about it. Pull back into safety, security, and protection. Draw some fixed income. Draw some guarantees. Reevaluate what your objectives are. But if you're still working, if you're a savvy market investor, believe me, I've talked to those folks this week. They see lots of opportunities in the market, and they're taking advantage of it. So, you know, there's lots of different ways to look at it. But if you're a typical conservative investor, don't dabble in speculation.
Right.
If you're going to invest in value, invest in good, solid companies that have proven track records. We talked about blue chips and dividends a week ago.
Last week, sure.
You know, go to those type of core value type stocks and invest your money there on a consistent basis. But bottom line, if you have a game plan, stick to it. Don't look at your statement every day. It's like buying a farm and having it appraised every month.
That's a good way to look at it, yeah.
You just can't do that.
Well, and what is the old saying, be fearful when others are bullish, be bullish when others are fearful. In other words, and I'm not handing out investing advice here, but you know, some of those pretty little things that you wanted to buy before might be on sale right now.
That's
so
exactly
maybe you
right.
need to pick up a few more shares. Again, I'm not trying to tell you what to do, but it all depends on how you look at it. Like you said, if you're getting close to retirement age, you might want to move completely out of the market.
Right.
And why do you think we're so reactive to the market? Is because
emotional.
It's emotional, but we have our finger on the trigger as individual investors at home with our laptops. Is that part of it?
Yeah, and
could
it
it
could
not
be,
be?
and I would caution people, don't all of a sudden try to become an expert, because we're in the most volatile economic times that I've seen in my career. And now's not the time to be speculating on what you feel or what you think. You need to rely on experts to give you advice and give you direction. I would strongly recommend you go talk to people that have been managing these types of situations for a long time. That's the best advice I could give you. If you're a small-time speculator and just getting started, don't invest with anything you're not willing to lose.
Exactly. By the way, this is very heavy. This jar, a viewer who can guess the closest to how much is in it or exactly how much is in it is going to win it. This is going onto a card to get you started for your Christmas shopping and your wish list or whatever you need it for.
Right.
Go to ozarksfirst.com, go to Ozarks Live, go to our Facebook page. You can tally how much you think it is. Also, the Resource Center has a Facebook page.
That's right.
You can take a stab at it there. We're going to announce the winner on Friday.
Yep.
All right.